Hi everyone, my name's Darryl Panes, CEO of As Good As Gold Australia, and this evening once again I'm joined by my brother Brian, a partner of As Good As Gold. And look, before we introduce our very special guest this evening, and this is our first interview for 2023, so we've had a holiday, haven't we, Brian? But glad to get back into it again.
Oh, fantastic to get back in it again, but I did enjoy my break.
Oh yeah, and I'd like to welcome everybody back to our channel and hope that you had a fantastic Christmas and superb New Year. Secondly, I'd just like to confirm that we are open for business in Melbourne. We opened our office November 14 last year, and we've got off to a wonderful start. We're at level 3, 257 Collins Street in Melbourne, and our contact number is 1300 295 833. So come and introduce yourself to our new team in Melbourne. They are waiting anxiously to see you. We've got Carmel, of course, who will welcome you with open arms, and Katrina down there just waiting to welcome you inside. So let's, point 3. We're going to do it. We've got a promo. We've got a promo to start off the year, and it's revolving around our 1 ounce silver and gold rounds, the Freedom rounds. So it's a pretty simple means of taking advantage of this promo. All you need to do is go online, go to our website, www.asgoodasgoldoz, that's AUS.com.au, and place an order for 50 of the 1 ounce silver Freedom rounds. After having done that, you can then place an order for a 1 ounce gold Freedom coin, or gold, I keep saying coins, and they're round. So place an order on a gold round, and you get that at spot. Now, the interesting thing about all of this, Brian, is that we tried for years. We didn't know where anybody could buy or how it was possible to buy anything at spot. And
I still can't buy it at spot.
We still can't buy it at spot, and yet we're giving it away at spot at the moment. So here's the even better news. If you wanted 2 gold coins at spot, all you need to do is double your order on the silver coins. On the silver coins, there I go again, on the silver rounds, and you double up, or you can then purchase 2 gold rounds at spot. If you want to double up on that again, you wanted 4, then you go to 100.
So for every 40, every 50 1 ounce silver rounds, you have one of these at spot.
Correct. So it's unlimited. If you want, you can have 50 gold rounds tomorrow at spot price.
I might even buy some myself.
Yeah, well, I think it's probably the only time we'll ever buy at spot price if we do it that way. So, and that'll run through. It's true too. That'll run through until Wednesday, the 8th of February. Closes at midnight. So you've got 3 and a bit days to take advantage of that fabulous offer. Now the most important part of the evening is to welcome our very special guest. He is the Commercial Director of Matterhorn Asset Management, an author of Gold Matters and Rig to Fail. I speak of the one and only Matt Piepenburg. Good evening, Matthew.
Good evening, Matthew.
Good evening. Good morning from here. Great to speak with you.
We are living in a sea of debt. It hasn't changed. Well, it is changing all the time. It's getting deeper and deeper. And I just want to bring everybody back to a point when President Ronald Regan, I want to talk about this raising of the debt limit. President Reagan came to office in the US when they had a debt limit that he had to raise to just over $1 trillion. And 8 years later, the debt was $2.8 trillion. Today, in 2023, the US government is talking about raising it from $31.4 trillion to obviously a much more significant or larger amount. We see this as hypocrisy and fraudulent, because when using fiat money, debt is impossible to reduce. Matt, what are your thoughts on how long this can continue before there is a total collapse of the fiat currency system?
You've hit the nail on the head. The topic du jour, the topic yesterday, the topic today, and the topic tomorrow is debt. It's that simple, and it's toxic, it's cancerous, and ultimately it's fatal. But like a doctor trying to predict the terminal illness, the date, the exact date is very hard. A weatherman can see storm clouds but can't predict the precise moment of the rain. It's interesting that you mentioned Reagan. The budget director under Ronald Reagan was a guy named David Stockman, and he's written a fantastic book called The Great Deformation. He's also from my hometown back in the States.
All right.
I played baseball and football on a stadium with his name on it. He was one of my early heroes, and I've been reading him for years. And like David Stockman, who warned years ago that this was fatal. This was unsustainable. It's also when you monetize your debt with counterfeit fiat money, you have a counterfeit debt solution, you have a counterfeit politics, you have a counterfeit currency. It may buy time and votes and prestige and even a Nobel Prize for Ben Bernanke, but it's absolutely counterfeit. And that's not sensationalism. It's not grandstanding. Even a 10-year-old would know that if you're creating money out of thin air to pay your debts, there's something inherently, intuitively wrong with that. And yet that comedy has been our policy for decades, and it certainly became our policy under the Bernanke, Geithner, Paulson magic trick in 2008 and the Troubled Asset Relief Program. And we thought $800 billion to bail out the very banks that put us into the crisis was a huge amount. And then Bernanke in 2009 promised that QE1 would phase out by 2010, that it would be temporary. And of course, QE1 became QE2, QE3, QE4, Operation Twist. And then, of course, in 2020, unlimited QE. So it really is crudely an addiction. It's an addiction that buys a temporary buzz. The temporary buzz ends in a brutal hangover. What's amazing to your question is when. It would be wrong of me to say a precise date or time. Even I know at Davos, which is not my favorite town in Switzerland, but I know for political reasons, I know at Davos, Rogoff, the Reinhardt and Rogoff duo, said he was surprised it didn't blow up in 2022. I think Stockman was surprised it didn't blow up in 2018 when they were raising rates. The problem with predicting a precise year is difficult. It's very easy to see the direction, though. And the key issue for me, the Boy Scout motto is just be prepared. I think to try and predict is as Egon says, a mug's game, but to see the obvious, to see the storm clouds in the debt markets, the currency markets, the bond markets, it's so crystal clear. And to see the desperate attempts to change the rules, the definitions, whether it's recession or inflation, to buy time with fluffy words to hide incredibly bad math. I've never seen math like this, so we get into that. But Stockman was warning of this 5 or 6 years ago, and it's not that Stockman's wrong. I've been bearish on the global credit markets for 5 or 6 years. Anyone who knows me and my analyst when I was in a hedge fund or a family office, I was always shaking my head as the ultimate bear in the room, and it was kind of a joke. But like Stockman, I never thought the Fed would go from 3.5 trillion to 4.5 trillion to 5 trillion to 6 trillion to 7 trillion to 8. So if you want to keep bringing the champagne and the martinis and the beer, you can keep the party going. You can even throw in the Bloody Marys. But the hangover that we're postponing and the consequences, in my opinion, is criminally negligent. To modern monetary theory, this notion that you could monetize your debts with money that's not linked to a good or a service that's fiat, that is a solution. The fact that became a policy, which was once a fringe concept that you wouldn't study in business school because it was so inherently bogus, that unfortunately has become the policy of all the great central banks in the developed economies. And it's something I think if we don't cancel history or deny history, that will be written about for years. How did Nobel Prize winning central bankers and FOMC leaders and banks leaders in Japan, the central banks of Europe, and of course Australia, how did they get away with this for so long? How did they trick the masses to think this was a solution? I think the hubris is extraordinary. I think sadly not enough people for many years understood the simplicity of the stupidity of central bank policy like this. And now, as we're starting to feel the effects of inflation and distrust our political leaders, as we talked about prior to this, whether in Australia or the US or Canada or Europe, people are becoming more and more informed. That's a good thing. I think as people become more informed, that helps. But as they start to feel the pains of failing currencies, then they'll get more educated real quickly.
Yeah. Look, I think it is a confidence thing. I very often, I think back 1965 when President de Gaulle brought to the attention of the world that he had lost confidence in the US dollar. And he said, look, I do not trust the Americans. I do not trust their currency. I only trust gold. Sent a warship to the United States and did the exchange currency, $35 an ounce in those days, what days they were, and in exchange for the gold. The point was, and the reason he lost confidence, and he knew that America had overprinted due to the war in Vietnam, and he got his gold, and that was fine. But then there were a number of other countries, of course, who attempted to do the same, and America knew they had to do something. And they did. They introduced the petrodollar, which pretty much saved them at the time. But I look back at that and I think, does it need, and it possibly does, could it just be another President de Gaulle? Somebody of real substance who stands up and says, hey, I don't trust you anymore. I don't trust your currency anymore. And so we know what happened, of course. De Gaulle went from $35 an ounce up to $800 an ounce, from 71 through to 1980 over that, a loss of confidence. So I'd ask the question, could it be Vladimir Putin? Could he be the next Charles de Gaulle? I've got a comment here, a reference here. This is from Alistair MacLeod, who we speak with very regularly. And Alistair's comment is significant. He says, right now, it's a very recent publication, there are huge developments between Russia and its partners in the Shanghai Cooperation Organization. They are going to have a gold standard. They want to have something better than the dollar. That has led to this evolution toward trade arrangements being settled on balance with gold. And that's obviously what Russian President Putin wants. And that is destructive for Western fiat currencies. Now, if Putin continues to go down this line, then I see the American dollar in dire straits. How much impact do you think that Putin may have on where the dollar's heading right now? What sort of impact do you think he may have?
Profound impact is the short answer. The long answer is, first of all, as always, I typically tend to agree with Alistair for so many reasons. I mean, I began writing about the absolute stupidity of the sanctions almost from day one in early 2022. As soon as the war began and the sanctions kicked in, it was obvious to me that they were going to backfire. I wasn't alone, but it was obvious to me that that was a typical Western, short-sighted, myopic, chest-puffing, headline-grabbing policy, which frankly, even folks like Henry Kissinger, who I'm not a big fan of, but most true statesmen, of which the West has none, Kamala Harris certainly doesn't qualify. Most true statesmen said this was suicide. Don't go there. Don't push this. Don't push the war. It was an avoidable war. We can get into that. It's highly detailed. It was a very avoidable war. But once the war began, at our provocation, in my opinion, and that's a very controversial statement, but once the war began, the sanctions were even stupider than the war in many ways. Condoleezza Rice, years ago in 2014, typical American bravado, said that, Russia would run out of money before the West ran out of energy. Don't worry, we can push this bully around. We're the West, we're America. Well, that was simply quantifiably and empirically not true. The West was going to run out of energy before Putin ran out of money. And ironically, one of the reasons, there are many reasons why Yellen and Powell and even Larry Summers were pushing a strong dollar throughout 2022, which was a devastating policy for so many reasons. But one of the reasons was to attack the ruble. And that, of course, completely backfired as well. What happened after the sanctions, you take Russia off the SWIFT reserve or the SWIFT system, you freeze its reserves, which is effectively defaulting on the treasuries that they owned. We defaulted on Russia's treasuries. But when you do that, you have massive ripple effects. I often said if I had an account at Goldman Sachs or Citibank and they froze my account, I wouldn't recommend that bank. And other countries in the world were watching Western arrogance and collective thinking, but it was really Western thinking based on U.S. policy. Other countries were starting to say, look, China, India, and of course even BRICS have said, if they can do that to Putin, they can do that to anyone. And so there was an immediate reaction from February, March, April, where China and Russia in particular have always wanted to de-dollarize. And this gave them the opportunity. We handed it to them. It's also important to realize that throughout the world, in developed and developing economies, there's over 14 trillion in US dollar denominated debt. That doesn't always mean money owed to US banks. It could be securities traded even in Asia or Central Europe. But there is a great deal of US dollar denominated debt. So when you freeze out Putin, force him more into the arms, the trading arms and settlement arms of China and the BRICS, you also have other countries who've been bullied by the dollar for decades. When the dollar gets stronger and they have to pay back those debts in US dollars, they have to either debase their own currency or raise rates themselves to pay back those debts. Many countries are absolutely fed up with being pushed around by the dollar policy. And what we did in 2022 was just throw sand in their eyes again. I joke that with friends or allies like the US, who needs enemies? Certainly at a political or a financial level. Great book called the Confessions of an Economic Hitman that talk about how US policy over the decades, goes into third world economies, developing economies, puts them into a debt they can't repay, and basically creates a feudalism in the third world economies. And I think what's happening now, back to your original question, is we pushed a little too far. Putin is not Venezuela. He's not Iran. Sanctions don't work the same way. Chest puffing doesn't work the same way. And what Putin is now doing is creating not the end of the dollar as the world reserve currency, because that will take years. What he has done and what he's succeeding at doing is the end of US dollar hegemony. And when you talk about the BRICS and you talk about China and Russia in particular, you have to remember also this was an insult to the petrodollar, which you mentioned at the beginning. As you said, we took away the gold chaperone under Nixon in 71, and then we immediately had the petrodollar to create demand for the dollar. So it was like instead of a gold-backed chaperone, now we at least had an oil-backed dollar that allowed us to have permanent demand for the US dollars all over the world. But in 2022, slowly but surely, you started seeing Saudi Arabia and other countries looking at selling, and China looking at selling and buying oil outside of the US dollar. And so that is a massive seismic shift. Again, I spoke about this in March. I wrote about it and spoke about it in Frankfurt twice this summer, that again, it's not going to happen overnight. It's not something you can time, but the process and the movement of history, including the Moscow World Standard for a new gold LBMA market, a new way to price gold fairly outside of the COMEX, all these things are seismic shifts. And the ripple effects are not immediate, although they have certainly shown up this year already. They're pointing towards a new kind of courage, as you said, the de Gaulle-like courage. The irony of ironies is, under Western propaganda, it's Churchill versus Hitler, it's good versus evil, it's Putin versus the West. It's simply not that simple. It's simply not that black and white. It's far more nuanced. And being in Europe, I speak to cab drivers and Uber drivers and hotel managers that are Ukrainian and Russian. There isn't this kind of visceral hatred. There's an interesting kind of second, first cousin relationship in these countries. It's far more nuanced than the Western media of just black and white, good versus evil. And Putin, of course, is far, whatever you want to say about Putin, and there's good and bad things to say, far more intelligent than our weekend at Bernie's President Biden, and certainly more nuanced and intelligent than Kamala Harris or Trudeau or Scott Morrison prior, or Macron here. It's we have a dearth or a paucity of really intelligent statesmen in the West, and we have this interesting, controversial former Intel chess playing KGB fella named Putin, who is again many things but not naive. And again, you always have to caveat this when you're speaking in English or in any language that isn't Russian, that I'm not saying I'm in favor of civilian deaths. It's tragic what's happening. I think war is not an extension of politics, as Clausewitz says. I think war is insane to solve a problem by killing each other. There's a great quote by Saint-Exupéry here in France that there is no victors, there's just the last to rot. When you see casualties every culture has seen it, from Vietnam to Gallipoli. No one wants to see atrocities, but again, I think this war could have been avoided. But Putin, when you listen to him speak, he's very clear. He did not want this war. I do believe him. He is much more honest about the realpolitik of money and of politics. The Cuban Missile Crisis in '62, Khrushchev and Kennedy found a way out. They found ways to avoid the military-industrial complex making decisions. Ever since the wall came down and the Wiedervereinigung, after the wall came down in Germany, Western presidents have promised Putin that they would not expand NATO, but every president since then has. It just keeps pushing and pushing Putin into a corner. When he warned that he's been pushed too far, again, not getting into all the nuances, what did America do? It sent Kamala Harris, who had never been to Europe before, who knew nothing about European history, politics, and certainly her own free thinking. She was simply a puppet of other neocons in the U.S. But what was her first reaction before the war is to keep pushing this NATO narrative. I think a NATO alliance is about as obsolete as a rotary dial phone in a nuclear age in 2022. So we really pushed Putin into a corner. The reaction, though, I think has been he has had the courage to call out the hypocrisy of Western financial leadership, of Western debt. He has many things Putin admires about America and the West, but he's called out the elephant in the room, that this so-called capitalism, which I'm a huge capitalist, I haven't seen capitalism since 2008. We've destroyed capitalism. I think Greenspan destroyed capitalism and every central banker since. And yet, again, Bernanke getting a Nobel Prize is the height of irony. But when you distort the bond market by printing money to pay for your own bonds, to keep interest rates suppressed, to give a stock bubble, something I've never seen. I saw the dot-com bubble. I made a fortune on the dot-com bubble on pure luck. But then to see the subprime bubble and then to see the everything bubble, when that is entirely based on fiat printed money at a central bank, that's not capitalism. And the debt levels that we've sustained to monetize that bond market and to inflate that asset market in the equity markets has created the greatest wealth disparity in history, greater than the French Revolution, greater than 1917 Russia. So Putin is just calling out the obvious. He's calling a duck a duck. This isn't real capitalism. This is tragic and toxic debt. And this isn't good statesmanship to go to war over NATO alliances and a puppet president that was put in 2014 who is not. I mean, you can say whatever you want to say about Zelensky, and you can say whatever you want to say about Putin or Biden or anyone else. Zelensky is a former actor whose first action as a democratic leader was to jail his opponents, shut down the media, and go against the Christian church. He's hardly a Ukrainian George Washington. Again, all of these things can be debated. All of these things would be discussed, but what we're not seeing in the Western media, certainly in the US, is any kind of public, open discussion of these difficult facts, because facts are stubborn things. Math is a stubborn thing. Inflation and currency debasement is a stubborn thing. All of these things need to be spoken, and to have to rely on Putin in Russian, translated through periodicals and media that won't bring his news to the world. At least we're not seeing his side. But it is ironic that Putin could be, as you said, the new de Gaulle, at least calling a duck a duck. He isn't a perfect hero. No one is. But what's lacking, certainly in the panoply of mediocrity, from Trudeau in Canada to Morrison during the COVID crisis to Biden and Harris to Boris Johnson, whoever is going to be the next leader du jour, is the C- students, the most mediocre personalities, economically ignorant, historically blind leadership at a time when we need something braver, smarter, and more blunt than that right now. And it's ironic that we're seeing that more from Putin than we are from Biden or anyone else right now. And it is, again, it's not me being pro-invasion, pro-war, pro-death of soldiers on either side. I said Ukrainian parents, Russian parents, no one wants to see this. I think it could have been avoided.
There's a comment there that Matthew made on bullying. Putin is, we're led to believe that he is an absolute out-and-out bully. But I made a note here only 24 hours ago. And it states this: there was some serious criticism came from the Chinese embassy in Lusaka, Zambia, last Monday, which blasted the US over its catastrophic debt problem, and they would have every reason to do that, and accused it of sabotaging other nations. Well, and that's exactly what they're doing. It's exactly what Matthew was talking about, right? But isn't it interesting how we perceive a bully to be? And the US has been doing that with their dollar for a very long time.
Oh, yeah, that's right. They've really been doing it since the Vietnam War.
Yeah.
Which brings me to the point, Matthew. I always am amazed because I've studied a little bit of history, but especially history around First World War, the Second World War, and certainly from the First World War, you can tell that after 6 months they all thought the war would finish. So, what was paying for the armory, the soldiers, the whole works was the gold, which they accumulated as money. But as the 6 months was coming up, between 3 and 6 months was coming up, and they could see the amount of gold disappearing from their coffers, they all went to fiat currency. Right. So, I continue to say we have a look at the war and what the costs are, and it's unbelievable that we can only fight them with fiat currency. We can't fight them under a gold standard because there isn't that amount of gold to pay for those things. Unbelievable. Even my wife says now she's not Einstein, but I love her very much. She's quite an intelligent woman, and she said, "Why can't these two guys just sit down at the table, and sort out the differences, instead of blowing up buildings and, soldiers being, reduced to rubble and the whole work." So, yeah. I'm going to move on, Matthew. We're still going to talk on the same sort of issue, but this one is all about the $1 trillion platinum coin. Now, you don't know us that much. Egon knows us very well. Darryl and I started a engineering business with our father, family business, and we got it to an export stage where we were exporting our automotive product lines to about 18 different countries throughout Europe and America. But we also manufactured tooling for the Perth Mint. Now, at the time we were manufacturing for the Perth Mint, we didn't know about gold and silver in reality. We certainly weren't in the bullion business. But what we did do, we manufactured parts for the Perth Mint to produce their coins. Right? We know what tooling costs, and we know how fast a coin can be produced. We're engineers. That's how we made our money. So this next question involves a little bit of that information. The US government has mentioned to partly solve the debt ceiling crisis that the US Treasury should purchase a $1 trillion platinum coin and then use this in their books of trickery for income. Now, I have two statements here. One, $1 trillion is 1,000 billion. So the US would have to issue approximately just under 1 billion 1-ounce platinum coins or 500 million 2-ounce coins. One only $1 trillion coin is absolutely ridiculous and typical of a politician's idea, right? They don't know anything about finance, politicians. Statement number 2, printing paper or minting a coin does not produce anything. There's no labour involved. There's no labour in printing paper for money, and there's no labour in printing or getting one coin up. So, again, Matthew, what are your thoughts on this using a platinum coin or even a billion platinum coins? You cannot produce 1 billion coins, or if they were 2-ounce coins, 500 million in the period in which they want to use them, because it's absolutely impossible. So what are your thoughts?
Well, look, the entire example is just a metaphor for what is the common financial policy post-Vietnam, post-Nixon is fantasy. It's fantasy. It's, on the back of a U.S. paper dollar says, in God we trust, in the full faith and credit of the U.S. Treasury. I suppose if you want to have full faith and trust in anything, that can be its valuation. By political fiat, this is the value of something. I wrote an article last summer. I'm a polo player, and I said, well, we could just make polo horses the standard for the new, polo back dollars or polo horseback dollars. There's a finite supply of polo ponies. You could take polo pony droppings, horse manure, and wrap it in tinfoil and make that the full back. Whatever you want to put a value to, you can put a value to. So it goes back to, again, not to be flippant, but when you have any currency that's not backed by something of that's finite in its supply and that's infinite in its duration, like gold, you have to create a fantasy currency. And if it's not with a chaperone like gold to keep its supply limited and constrained, if it's not tied to a currency, you have an unchaperoned currency, which means you have it to the whims of political needs. And political needs are never about economics. They're about containing, retaining, and maintaining power. That's just the human, all too human Nietzschean profile of political psychopathy. There are very few profiles in courage, as Kennedy said, where a politician actually runs for the benefit of the country and the people, as opposed to their legacy and their reputation and their power. There are extremely good exceptions, but very rare. So to your point, whether you want to make it a polo pony or an artificial coin or a dot on a blockchain list, anything that's not backed by something real, finite, is going to be artificial and counterfeit. But that's all part of this fantasy narrative. As I said at the very beginning, when the math of debt becomes inconceivable, when you're talking 305 trillion, which I couldn't even write down on a piece of paper, and then when you add shadow banking to it, and when you add derivative markets, you're going into the quadrillions, and that's not sensational. So when you're looking at such horrendous math and such horrendous mismanagement since the 70s, and particularly since 2008, when bankers put us into this crisis, and our first reaction was to bail them out, it's too big to fail. Again, these were all wonderful statements with fancy terms like quantitative easing, just like the Patriot Act after 9/11 was a wonderful term, but completely derogatory to civil liberties. When politicians or headlines want to give a nice word to a bad situation, enough people can trust that until they don't trust it. And we see this type of blatant dishonesty with nice terms over and over. You're seeing that in the CPI definition of inflation. It's completely misreported. And that's not a tinfoil-hatted theory. Everyone on Wall Street knows that the CPI by the Bureau of Labor Statistics is an open fiction. It's probably misreporting inflation by at least 50%. Now, you also have, as we hit a recession, when you have an inverted yield curve and back-to-back quarters of negative GDP, when you have the consumer price index, completely in fiction, but when you have so many signs of a recession right now, the Empire Manufacturing, the 6-month leading indicator index, when there's so many clear and obvious signs of a recession, and yet we still aren't officially in recession because no one from Washington has told us so. So between redefining the definition of inflation, or redefining the definition of a recession, or coming up with a new trillion-dollar coin, these are all fictions to hide very bad math. It's, Australia is a rugby country, we're a football country, American football country. But if you have the power to move the goalposts every 10 minutes, you can constantly change the nature of the game. And it's like a lawyer. If you have the power to control what evidence comes into trial and omit the bad evidence, you can win every trial. If you have the power to create new definitions of recessions or new definitions of inflation, or literally lie about actual inflation to have negative real rates so you can inflate your way out of debt, these are all very clever tricks with very clever math, but they're dishonest tricks and they're dishonest math. And again, it's impossible for the average dentist or hygienist or bricklayer or carpenter or professional in any country to get into the weeds of monetary policy and get into the weeds of inflation or bond markets or yields and their inverse relationship to central bank policies and interest rates. But it's not impossible for everyone to feel the pain of inflation, or to see the debasement of their Australian, Canadian, American dollar, their yen, their peso, or their euro. That's something that common sense feels. So regardless of what the Bureau of Labor Statistics tells you or what your politician du jour tells you, when your $10 that you had 5 years ago doesn't buy you anything 5 years later, there's something wrong in the system. And if you want to believe who's ever put up in front of a podium or a media screen with lots of tickers underneath it and a nice necktie and a suit and credentials from a bank or an Ivy League university, if you want to just believe that blatantly without thinking for yourself, that's an individual choice. But I think more and more individuals, regardless, and not everyone's a portfolio manager, a gold executive in Switzerland, a former banker, and I thank God they're not. We don't need more of those, but not everyone is. But we all are, as we all have common sense. And I think that rise of common sense and a few individuals of courage, ironically Putin or de Gaulle, certainly not Biden, Bernanke, Yellen, or Powell, ironically, as more individuals of courage speak, more people start to scratch their heads and at least begin to think critically. That doesn't mean they have to think like me or you or anyone else, but they start to think critically. That's something that I think misguided and self-seeking and pathological politicians fear the most. And we talked about that, whether it's Andrews or Morrison, or whether that's Biden or Powell, or pick your country. They fear that the most. When they're at the helm of a failed financial system, when they're at the helm of a debt pile, and they call that a policy, when they're at the cliff of a massive inflationary moment, followed by a deflationary moment in the markets, when they're looking at the debasement of their currency year after year to sustain power, and they see more and more people catching on to that, that's when you have fear. That's when, as Hemingway says, when you have fear and then you have inflation, well, then you start to see suddenly coincidental wars, and you start to see increasingly truncated mass media, increasingly fractured society, increasing wealth disparity, increasing fiat debasement, and of course, more war. We're seeing all of that play out in real time right now, whether it's the discord in social structures and the identity politics. Hell, even Chris Lilly in Australia is no longer funny anymore. He's no longer politically correct. When you see censorship in the media, we see lockdowns like we saw in Australia, which again, I always thought of Australia as this, this is the land of Ned Kelly, of great surfers, the Anzacs at Gallipoli. This was a proud, strong country. And to see that country bow under folks like Andrews or Morrison was hard. It was hard to watch America do it. It was hard to watch it. Again, I'm not getting into the debate on COVID and Corona, but I think the policy reaction will go down in history as an absolute failure. But it was more centralized control. And one thing I talk about in all my presentations when I talk about fiat currencies, bond markets, debt levels, which are important topics, but they kind of gloss the eyes of people who aren't following finance. I understand that. But one thing history confirms, as Hemingway said, but this is something von Mises said, this is something Thomas Jefferson warned, this is something David Hume warned in the 1750s. Whenever you have a debt catastrophe like we have now, unprecedented, but throughout history, from ancient Rome, the Ming Dynasty, 18th century France, early 19th century Russia, whenever your debt is, when you're against a debt wall, it's very simple. You have a currency crisis, you have a financial crisis, you have political unrest, the social unrest, which is always followed by extreme control from either the political left or the political right. It's always disastrous. And what we are seeing now, and this is not about just coins and gold and dollars and euros and debasements and central bankers and mismanaged CPI rules and inflation definitions and recession definitions and inverted yield curves. What we're seeing now, which I think is the most scary part of a failed economic system, is more control, more censorship, a failed open media, failed discourse, and the rise of opportunists like Klaus Schwab, he's easy, and the rise of bad math like our central bankers, and the rise of failed managements like Sam Bankman-Fried, and more corruption and less accountability. Again, these are vague concepts, but we're all from Sydney to St. Louis seeing this play out in real time. And the fact that you now have, whether it was Facebook or Google, or in the past, Twitter, censoring what they considered misinformation or disinformation. As far as I'm concerned, whether it's Mother Teresa or Joseph Goebbels, everyone has a right to speak their mind. I don't care who it is. Never censor. The moment you truncate freedoms, there's a problem. The moment someone tells you what is misinformation, what is real information, and by force, that's a problem. The moment someone tells you this is the value of your currency and this is fine. When Nixon said that we would de-lock or de-link from gold, he said that would be temporary. Bernanke said that QE would be temporary. The list of disingenuous words hiding bad math, you could spend hours discussing and get into the weeds of, but it's not sensationalism anymore. So again, these are real problems there. And sadly, it's hard to talk politics and money at the same time because people have different views on both. But I certainly see a trend towards increasing currency debasement, higher inflation. You can see massive deflationary forces as markets eventually buckle under rising rates, because in a debt-based economy from the US to Europe to Australia, when interest rates rise and the cost of that debt becomes too expensive, companies fail, bonds default. So you're stuck between a rock and a hard place. Powell wants to raise rates to fight inflation. That's complete fiction. Powell is not raising rates to fight inflation. He can't fight inflation. He's misreporting inflation. He wants to have negative real rates. He wants to have inflation higher than the interest rates. And the reason he's raising rates now is that he'll have anything to lower once the economy crashes. He tried this in 2018. By the end of the year, the markets buckled. He cried uncle, and then we had to pause and then reduce rates. Well, now, given these debt levels, he's trying to raise rates. So when we actually have a depression he'll at least have some rate movement to lower, but I think that'll be far too little, far too late. And they're going to have to revert to more QE, which is inherently inflationary and inherently debasing the currency. And so Powell now has a choice to either continue to tighten and raise rates and completely kneecap the bond and stock markets and the economy, or he can pivot and become Arthur Burns as opposed to Paul Volcker. His biggest fear is go down history as Arthur Burns, but his ego thinks that he can be Paul Volcker. Paul Volcker was facing 900 billion in debt, not 31 trillion. So he can't be Paul Volcker. No. But what Powell's going to have to probably do is pivot. And if he pivots, that means more QE. That could bring temporary salvation to the markets, but it'll be inherently inflationary, possibly hyperinflationary. So there are no good options left. There's simply no good options left. QT, QE, either scenario creates chaos. And of course, gold loves chaos. And sadly, gold will get the last laugh. That's not a gold bug comment from a Swiss executive in Zurich. It's just common sense. I think that's the key theme for the 2022 and the forward, whether you're looking at the media, whether you're looking at gold, whether you're looking at stocks and bonds, common sense, like your wife, common sense. I would much prefer seeing Biden and Putin in a room with swords and pistols that send my sons or your sons out to fight these wars. So, common sense and more information will make more people aware of what policymakers have been doing for decades, but in particular since 2000, how they've absolutely destroyed fiat currencies.
Mm-hmm. I'd just like to add something to that. Matthew has talked about a lot of things. It's all very powerful information. But he's made reference to, with politicians and leaders around the world, dishonesty and corruption, right? One would have to agree with that.
Yeah, absolutely.
But one thing, I'd like to ask you this, Matthew, how about their qualifications? And I ask that sincerely. When you hear somebody like Janet Yellen try and explain inflation, she has seemingly no idea what caused inflation, and yet she must. One would think, because one would say she's an intelligent woman. But my concerns here are that so many people in these high-profile, powerful positions, none of them have ever run businesses. They've never employed 10 people, 50 people, 100 people. They've never been in a situation where they've been running a business in deficit and had to turn it into a surplus. They've had to become profitable. They've had to make decisions. They've had to increase productivity. None of these people have ever been in that position before. So do we have the wrong people there right at the start? Your thoughts?
So many important points you're making in one time there. I start with I don't know if it's made it to the media in Australia. There's a congressman out of New York called George Santos. This man is an extreme example. Like Sam Bankman-Fried is an easy target, but Santos is absolutely fascinating. Literally everything about this man was an open lie to get elected. Claimed he was Jewish, claimed he went to certain schools. He was an athlete at those schools, worked for Goldman Sachs. His mother died in 9/11. Literally everything he said, even his name, was a lie. And that is now come out. It's irrelevant to, and I happen to wish that his party did well, but it's irrelevant to his party that he's completely fake as long as he votes a certain way. So the integrity, not to mention the qualifications of the credentials of this man, are completely gone. And yet he qualifies as a U.S. congressman. That's embarrassing to the Congress. It's an embarrassment to the party. That's an extreme example, of course. But to your point, Janet Yellen, I believe Janet Yellen went to the same undergrad university as me, and I'm not saying this, and this is going to sound blowhard, 2 Ivy League universities, a law degree, Harvard, Brown, prep schools all over the place, a lot of money, a lot of credentials, but I learned nothing until I got into the real world. And when you get into the real world and you're running a fund or you're working or you're running a case, you also fail a lot. And I failed forward for many years. We all do, but you learn from that and you succeed from that. What you don't have in the Congress or the Senate is or certainly in a central bank, is any open failure admitted and learned from. There's zero accountability. There's never been a central banker that I can think of who's come up and said, you know what, maybe expanding that balance sheet from 800 billion to 9 trillion was a mistake. Maybe doubling our balance sheet in 2020 created this inflation. Maybe we made a huge mistake. We're very sorry. We're going to need austerity. We're going to need all the things that Reinhart and Rogoff, 2 credentialed academics, have said. We're going to have to be honest about inflation. honest that, like you would with your wife, honey, we're in too much debt to buy the Porsche or send our kid to Choate or Harvard. It's too much money. We can't do it. Normal people, common sense, have to tighten their belts, even have arguments, sometimes divorces over realities of finances. But in our central banks, in our Congress, and our Senate, every time there's a debt ceiling, they extend and pretend. Central bankers have never taken accountability for the wealth disparity and the inflation. It's important to know that we have a $9 trillion balance sheet of the Fed to create the biggest stock bubble in my history, in academic history, anything I've experienced. And 89% of that wealth went to the top 10% of the US population. So we created the biggest, that to me should be headlines every day, but that would create pitchforks. And that's scary. But just what we've done at the central bank to extend that balance sheet, and I'm a member of that top 10, 1%. That's a danger to me to see that much wealth disparity. That's a danger to any society to see that much wealth disparity. So you can try to hide that in identity politics. You can try and create racial tensions. You can sexual tensions, trans tensions. You can create headlines about what's offensive or not offensive. You can talk about these wars to distract the masses from what's happening right in front of them, is that their Uncle Fed and their aunt president just ruined their economy. And no central banker is credentialed enough to take accountability for the failures. We've all failed at something in our lives. I've failed exams. I've failed in business. I've succeeded. I've made more money than I deserved on a .com IPO. But through that whole pell-mell of growing up and making personal and financial mistakes, you learn. Correct. But you'll never see a senator or a congressman or a central banker say, God, we got that wrong. I think the last time I saw a politician admit they was wrong was Kennedy at the Bay of Pigs. That was my fault. It was my fault. I take full responsibility. And so I think that kind of human issue that we're lacking in politics right now is the biggest issue. And it goes right back to de Gaulle and Putin. Who's actually speaking the truth? When we have to rely on Putin to get the truth in the West, that's a scary thought.
I'm looking at my watch here, Matthew, and Darryl, I'm going to miss a question here. No, the reason why, because I want the next question to be on what Matthew just talked about. All right. Yeah. And a question I was going to ask, and we will do it, hopefully we can do a second interview, because I asked the question then too. It's all about China, mainly China and other countries who are affiliated with China, Russia and Southeast Asia, accumulating gold. Right, they're accumulating gold with masses and masses and masses of it, And the funny thing is that, and we're talking 1,000 tons, right, in the last 12 months. The funny thing is, Australia produces is third or fourth, depending on where Russia is, or third or fourth largest producer of gold in the world, right? And we sell everything to any country that we might that we want to sell to. Obviously, it brings in money to our coffers. But the only gold Australia has got, I'm talking about the central bank, the only gold we have got is 80 tons, and only 3 tons actually in Australia and 77 tons in the Bank of England. So now that is a question I'm going to ask on my next session and not today, because I'm going to follow up from what you've just said. About every 6 months I go to a US website, and it's called the usdebtclock.org. Now, from here, we can see the US population of 334 million people, but we also see that the number of millionaires stated on the figures in the US is 22.6 million. The number of millionaires, 22.6 million. That's a ratio of 14 to 1. So I don't know if my next door neighbour's a millionaire, but I don't think that for every 14 people that I talk to are millionaires. But the thing is, this is the incredible part. Has inflation taken away the meaning of becoming a millionaire? Because I grew up at school. I'd love to be a millionaire. I'd love to be able to own that Ferrari. Boy, every Tom, Dick and Harry's owning a Ferrari these days.
Well, according to that.
Yeah, according to all these figures. So what is the true inflation figure? We have covered it just a little bit, but I want you to get more into it. What have they done to the description of the word inflation?
Well, there's just a couple of weeks ago, I think it was Paul Krugman, another Nobel Prize winner, tweeted something that when you look at super core inflation, the Fed has met its target rate of 2%. Super core inflation is down. We've got super core inflation. And the Wall Street Journal got galvanic. This is great news. Super core inflation is, we're really, what super core inflation doesn't include though is is energy costs, shelter costs, food costs, and transportation costs. So yes, if you take out everything that actually costs something, inflation is really great, supercore inflation. But again, that's just another dramatic, almost Santos-like pathetic headline that attempts to misguide the reader. Supercore inflation is useless. But if you go to the CPI inflation scale, which is what the Bureau of Labor Statistics uses, what the Fed uses, they'll tell you that we've gone from 9% last year at its high in June to about 6.5%. Great. Powell's fight against inflation must be working. Again, if you just look at the headlines and don't look under the hood, the headlines support the false narrative that we're fighting inflation with rising rates. It's not true. Again, if you use, and Powell wants to be Volcker, so let's use the same inflation scale that Volcker used in 1980. If you use the same scale, the same weightings, and the same metrics, our inflation is closer right now to 16 to 17%, which is actually what it feels like. When you take the GW Bridge from Jersey into Manhattan, it's the toll. I remember it was $4 and it was $12 and it was $15. I mean, that's the inflation. But the CPI scale is a piece of fiction. It deserves the Nobel Prize for fiction. If you control the narrative, you control the information, you control the weightings. I think real inflation, which is the shadow stats use of the Volcker scale of the 80s or the 90s, they use both scales, were much higher into the double digits of real inflation. But what Powell wants is to have his cake and eat it too. He wants to raise rates so he has something to lower. But he wants negative real rates to inflate away debt. This is the oldest trick in the book. When you can inflate away your debt by debasing your currency, you need inflation to be higher than the 10-year treasury yield. You need inflation to be higher than the interest rate. But you don't want to report the inflation. So you can have your cake and eat it too. You can promote inflation secretly and misreport it, and then get the headlines that saying you're beating inflation by raising rates. Again, this is not a conspiracy theory. Just do the math. Look at the way it's done. Powell is actually looking for inflation, like every central banker or every regime throughout history with its back against the debt wall. They inflate away their debt. And that's what we're doing. We're looking for negative real rates, and then we're lying about how we report inflation. So no, the official CPI, they call it the Bureau of Labor Statistics. I think in my last article, I call it the Bureau of BS. It's just BS. But again, if you control the press, you control the money printer, and you control the media press, the messaging. And the sad fact is that most of our once revered periodicals like the New York Times or the Washington Post are now owned by individuals or corporate boards with an agenda. And they're highly linked to political parties. This is not conspiracy theory. This is just the fourth estate has failed us. We don't have a free press. This is something, Thomas Jefferson and Thomas Paine warned about. Thomas Jefferson warned about a central bank would be the ruin of our country, and he was right. And Thomas Paine said, I'll fight to the death for your right to say it, even if I don't agree with it. But we don't have the right to speak publicly. We have to go to Substack or platforms like yours just to express opinions. My opinions could be dead wrong, but they're free opinions. They're not constrained by a board, and they're not constrained by Goldman Sachs, and they're not constrained by a media outlet. And I could be wrong, but thank God we have the chance to speak our opinions. We shouldn't have to sneak through, a minefield to find a platform to do that. What we're not seeing in the New York Times or in the Washington Post are exchange of free opinions. And I think the most dangerous lie is the lie of omission. When you want to look at a free press, whether it's in Australia, the US, or Europe, look at what they're not writing about. What are they not including in the news, including alternative views of inflation, including our money supply issues, including our debt levels, including this wealth disparity. The millionaires you're talking about in the US doesn't surprise me. There's a great book called The Millionaire Next Door. A lot of millionaires live very modestly. They don't have the 308 Ferrari in the driveway. They don't show off. They do save their money. The sad thing is, and you talk about war, if you look at the US Civil War, the South, for a couple of years, was surviving on some gold, but then it had a Confederate currency. And by the end of the war, and just like in the North and the South, those currencies had no gold backing and they were useless. So you could be a millionaire in South Carolina or Virginia, or even in Maine or Boston, but the currency had no value. So a million today doesn't mean what it meant 10, 15 years ago. And if you're measuring your millions in fiat Canadian, Australian, or American dollars, you're not as wealthy as you think. And again, people would say, well, how do you measure gold? I don't measure gold in US dollars. I don't measure it in Australian dollars. I measure it in grams, ounces, and kilos. It will always get the last laugh over fiat currencies. It always has, it always will. And that is not a gold bug apology. It's history.
Yeah, perfect. Darryl?
Yeah. I want to ask a question on silver and the silver price at the moment versus where it's heading. Lots been said about gold and gold and silver, silver particularly, having a very big year this year and next year. On a Kitco online news survey showed investors could see silver jumping to US $38 per ounce, that's $50 Aussie, or a 50% increase in 2023. And we know we've got a weakening dollar, US dollar, and we know we've got inflation, we've just talked about that. And silver, we've got to keep in mind, has reached $50 twice before. What are your thoughts on where silver's heading this year, and will it hold? I mean, it's hit $50 twice and it's lost ground very quickly. Do you think this time around we can expect it to hold? What are your thoughts?
Everything is the same and nothing has changed, or they say the more things change, the more they stay the same. I think the first question, will silver rise? Yes, in 2023, because gold will rise. That's the first answer. When gold rises, silver will follow, and silver will follow faster and higher. It's the little speedboat next to the juggernaut, the battleship that is gold. Silver is a little PT-109 boat next to it that moves a lot faster, a lot more volatilely. It's very clear to me. We thought 2022 would be the year for gold, and it was in many ways. It was still the strongest performing asset class against, the nominal return for stocks and bonds last year in the U.S. was the worst since 1871. Total return in sovereign bonds was the sixth worst year since 1700. So asset classes, traditional risk asset classes, got clamped last year. I think gold in US dollars was down like 0.2%. In Australian dollars was up 6%. In the UK it was up almost 12%. And in the euro was up 5%. So gold did not bleed nearly as badly as risk assets like stocks and bonds or credits and equities. So gold held its own, but it didn't rip in 2022. People were disappointed. You had war, you had inflation. My argument throughout the U.S. 2022 was the strong U.S. dollar was holding gold back. That dollar was unsustainable for a number of reasons. So I think this is the year. And again, it's a mug's game to predict, but I think this is the year that Egon and I and many others think gold is clearly going to break 2100. In my opinion, short of outright absolute distortion in the COMEX market in a massive short position by those LBMA banks. But short of that, and even notwithstanding that, for a lot of reasons, I don't think that derivatives trade is going to hold the gold price down. So if gold should and will break 2100 and go higher in the years ahead, simply because it's not that gold has to do strong or silver, it's that currencies have to get weaker. And that's the direction. Currencies, I can't think of any scenario where currencies get stronger naturally in this backdrop. So to your silver question, when gold rips, silver will rip faster. And if there's a chance for silver ever to get above 38.40, it would be in this environment. In terms of whether it will hold, it will all depend on the narrative du jour at that time. It will also depend on which gold markets are predominant at that time. I think we're seeing I don't think it's going to happen overnight. We're seeing a move from London to Moscow in terms of how precious metals are being priced fairly. Well, we have a bifurcated world where you have a Moscow price and a London price, a spot price. This will all come out in the chaos of what's ahead. And I can't predict the exact timing of that chaos. Will the war be solved? Will the war extend? Will we have a major geopolitical crisis? Will we have a detente? Will a bank fail? Will Saudi Arabia not be able to bail out a bank like Credit Suisse? Will we have a Lehman moment? Will we have an assassination? These are the things that trigger history. Will we have Italy default on its bonds? Will the European Union disintegrate, or will it crack? Will we see fissures politically? These are the triggers that will create the kind of chaos where gold and silver, in addition to just the direction of the currency markets, gives these precious metals the last laugh. How they hold will depend on the narrative, how the narrative holds, and how these derivative-based massive levered banks push the paper price of gold on the COMEX. But I think those days are short-lived, especially in a rising rate environment. I think the derivative market, and if the derivative market showed some kind of counterparty risk, there are so many different needles at the balloon, pointing at the balloon of global currencies. It's very hard to predict the price of gold and silver in these currencies because they're so volatile. But silver has an amazing opportunity. I mean, anyone who has silver, who bought silver below 20, at 20, if they have the patience and the confirmation of history, and they're not trying to worry about what quarter or what season those metals get the last laugh, they're going to do very well. When you talk about Australia producing these precious metals and then selling them to China, that's short-sighted as a nation. It's the same thing as an individual. You have to hold your one asset that has the most staying power historically and not worry about the calendar and worry more about the paper currency that's dying in front of you. But I know you want a straight answer, gold at 40 by Q3. I can't give that because I think that would be dishonest. What I can say is I promise, well, I don't want to promise, I'm quite confident that your gold and silver today, no matter when you bought it and how much you have of it, will be worth more than your Canadian, Australian, or US dollar tomorrow. For tomorrow and the next day and the next day and the next day, no matter how it's priced on spot or what the premiums are, that paper currency that's the full faith and credit of your government has absolutely no credibility. And no matter what narrative they put, you feel it at the grocery store, you feel it at the car lot, you feel it at the real estate markets. Your dollar just doesn't buy as much, and your silver and gold will. I think silver is going to have an incredible run, especially if gold has its incredible run, and silver will move faster and higher. It's always been considered the more volatile asset. If you're a speculator and a wealth preservation thinker at the same time, we tend to have 80% gold and 20% silver because gold is more of a preservation asset than a speculative asset. But the silver can make you feel really good when it rips. And then you'd have to pick your highs. That's an individual choice. I look at technicals as a trader when I would sell my silver and maybe buy some more gold. It depends on what my motive is. Is it to preserve assets, or is it to get some asset or some price appreciation and some capital gains? I mean, these are all very nuanced questions. Maybe too long of an answer, but silver will rip faster than gold when gold takes off. That's for sure. And I think it's very possible that we can see silver well into the 30s this year if conditions continue the way they are.
Excellent answer. I can't improve upon that, Darryl.
No. Well, that's why we asked Matthew.
That's why we asked Matthew. Yeah. I just wanted confirmation here. Darryl, you can finish off.
Look, we did have a couple of other questions, but we don't want to run this for 4 hours. We'd love to, but our viewing audience may not feel as enthused as we would be. But I did want to bring this to your attention. This is, I just noticed this on the weekend. This is a publication. I'm just going to lift this publication up in a moment, and I hope it comes up okay on camera. But basically, we've had in Australia, we've had an awareness campaign on homelessness. And the reason I want to bring this to everyone, and it was, I mean, there was a lot of effort put into this to create that awareness, and I'm all for it. However, so these famous people have been painted in gold, and they wear gold clothing. And they actually spoke with the artist and said, "Why did you select gold?" And he said, well, normally when they create a statue of somebody famous, it's bronze. So he said, I wanted to go a step further than that. I wanted to have the ultimate colour, gold. And it's interesting because when we talk about gold, talk about that idea, that was golden. People, when they compete at the Olympic Games, it's for a gold medal. It's not for a silver medal or a bronze medal. It's for gold. Gold is the ultimate. Interestingly enough, it's on. Everyone knows that. Everyone knows that. But when it comes to purchasing gold, we've got 2% of the population, 1 to 2% of the population that actually do that. It staggers me that governments and mainstream media have been that powerful that they've been able to take people's mind of investment-oriented people away from gold, because in every other respect, gold is the ultimate. You'd think everyone would own it. Just your response to that.
It's an interesting point. I mean, it's 0.5% of global financial assets. It is an inherently scarce asset. Its stock to flow ratio is less than 58. It's 2% production a year. It's a finite asset with an infinite duration. And there's a reason it's not just a symbol of sports awards or golden relationships or golden metrics. It's not just a barbaric relic that sits in the ground and you pay a fee to watch. It's a monetary metal. And to your question, why doesn't everyone get this? Well, in some ways, I remember during reading David Stockman's book, again, during the crisis in '89 and the Nikkei, when Japan went from the sun that never set, the rising sun that never set, to an implosion in '89. The Nikkei saw massive losses. 30 years later, it has not recovered. But there was a saying in Tokyo in the late 80s that how can we all get hurt if we're crossing the street together? There was this herd mentality, this group think that let's think alike, just like over the top at Verdun or Gallipoli. Let's just march up the hill and you get massacred. There's safety in numbers. There's safety in the RIA industrial complex that tells you a risk parity portfolio of stocks and bonds will save you. Bonds will not save you. They're correlated to assets like equities now. The traditional portfolios will not save you. But it's very, very hard to stand apart from a group and question something. But no time in history, whether it was Australia in 1914 or 2023 or London or New York, did anyone who bought gold regret having gold? No time. In the Civil War in the South, if you were in Virginia, you would much prefer your gold over your Confederate Jeff Davis dollar. It's interesting, the attempt to discredit or at least omit gold from the conversation, because it is the number one threat to government currencies.
Yep.
And we haven't had a chance to talk about central bank digital currencies or the e-dollar, the e-yen, or the Great Reset. But all of these things, to have any credibility, are already talking about having some coverage by gold, because I think more and more people realize there's no credibility without it. But yet, to your point, it is fascinating. Where we deal in Switzerland with very high net worth clients, and of course I can't give you their names or their amounts. It's not a surprise to me, though, that folks who've made money in Bitcoin or Wall Street are spending lots and lots of money on physical gold. You don't have to be a millionaire in Zurich or Davos or Gstaad to be smart. And you can buy coins right there in Melbourne or in Sydney or in St. Louis or in Detroit or in Chicago. And I've never met someone, maybe they're not happy that the prices moved ahead, but an ounce of gold will still buy the same suit in London that it did 100 years ago, 200 years ago, and 300 years ago, but $100 will not buy the same suit. So again, it's common sense. It's not gold bugging. It's not pushing a product. It's common sense. And frankly, the less the better. Keep it for more for us, because Egon talked about this series. Those of us who thought ahead will have to help a lot of other people in our family and in our neighborhoods. And we're not going to be able to help our governments, but we can help ourselves and each other by thinking differently and thinking ahead. It's not contrarian crazy to own physical gold and silver. It's just long-sighted thinking. And we live in a world of short-sighted thinking and of groupthink. And so it's always the contrarians who aren't crazy, but are just commonsensical, who preserve their wealth the best. And again, it's not arrogant. It's just history. And sadly, I think it's unfortunate that at least our governments aren't backing our currency with gold. If they're not going to do it, you have to back your own currency with gold by buying as much as you can at the fairest price you can without looking back.
Matthew,
Wow.
thank you so much for your input this evening. It's so much appreciated. Matterhorn Asset Management, they've got the biggest private vault in the world. Could you just tell us a little bit about Matterhorn and if a number of our viewers want to contact you, if they're interested in vaulting large amounts of precious metals, what do they do? Who do they contact? Could you take us through that?
Yeah, I mean, the vault itself is something you have to see to believe. It is the safest, largest vault in the world. It's EMP proof, nuclear proof, gas attack proof. It's deep into the mountains at a non-disclosed location, the Swiss Alps. It's something to see. And that's where the gold is stored. And based on the way we use our gold storage, we have no access to individual gold. There's danger in how, it's not just putting it in the safest vault. You have to have completely segregated, allocated gold with certificates that no one can touch but you for your own audits and your own control, so that even us have no access to the gold. We simply arrange the transport and arrange the storage. But Matterhorn has a unique vision that Egon started 20 years ago. Part of that was how gold is segregated and allocated and owned and stored, and how safely stored, to worry about things like nuclear risk, which again seems sensational. We hope it's never going to be needed. But we also have direct relations with the refiners. 70% of the gold in the world is refined in Switzerland. So we can go to the best refiners, get the highest quality gold, and then transport it to the vaults. But if you want, we've had Australians, Americans, Brazilians from 80 different countries transport gold to our Swiss location just for safety. So it's a unique ownership structure. It's a unique vault structure. But the premise of Matterhorn and Gold Switzerland, which is the same thing, it was founded by Egon, was very simple. It's wealth preservation. It's not a speculation trade for us. You make money. And I learned this on Wall Street as a hedge fund manager. You make money by not losing money. Once you have money, you have to preserve its purchasing power. So Egon's entire premise at Matterhorn was wealth preservation. The vault was the safest vault. The ownership structure is the safest structure. So you don't have these kind of headline moments of disappearing assets. It just simply is impossible the way we've structured it. But our offices are in Zurich, and we store gold also in other parts of the world. We have another big vault in Singapore, but Switzerland is our main vault in Zurich and in the Swiss Alps. Our minimums are a little bit higher, sadly, so it's not for everyone. That's the one thing that I think is sad, in the sense that we're not selling to the retail markets, but it's simply the way our business model works. It's more for the higher net worth. Our minimums are 400,000 US equivalent, roughly, for our Zurich vault, and our Swiss Mountain vault is 5 million. So it's a higher ticket, but that's just for our operational costs, the way it works. But we have, it's not all just the ultra high net worth. Some can meet those minimums just to feel they're having the safest storage locations. And we've had issues this year because of Swiss neutrality and following the West against Putin, etc. With Switzerland, we've done a real strong study of all the different jurisdictions. We've done it pretty objectively, and we're reporting on that. We still see Switzerland as the best jurisdiction in the world for holding gold. That doesn't mean you can't do it safely in your own home countries and in your own way, but that's how our clients tend to see it. And so the best way to find us is on goldswitzerland.com. There are plenty of contact forms there, and you can reach out to us and speak to us at any time. Of course, on Swiss time, not Australian time.
Do you know, many years ago, a gentleman by the name of Brian, and I refer to him very often, Charlie Tremendous Jones. Don't know if you've heard of Charlie Jones, but he was a great American motivational speaker. And amongst many other things, he would say, in 5 years' time, you'll be in exactly the same position you're in right now, apart from two things: the people you meet and the books you read. And tonight, our viewing audience got to meet Matthew Piepenburg. Extraordinary feedback, information that you presented to us tonight, Matthew. We are so appreciative. And our viewing audience is much smarter, or is much smarter tonight after listening to that in the process. So thank you once again.
My pleasure, absolutely.
If I can just finish with a couple of quotes. Peter Daniels, of course. Peter Daniels is our lifetime mentor. And Peter would always say, I do not care what poorly executed economic decisions are made in the world tonight. Tomorrow I'll still be able to party. Why? He owns gold. He has valuable assets, and he's always in a good, sound position. And he's educated his children. They all follow the same policies, and their children follow the same. So they've created a dynasty within their family. And Jim Sinclair, of course, become your own central bank. They own gold. Why shouldn't you? Makes sense.
The central banks are buying it every month. You see a headline with a central bank buying more gold.
Yep. A lot of things about central banks we don't like, but that's one thing we've got to recognise and say, why not follow suit? And Egon von Greyers, of course, and we've spoken about Egon, and Matthew has this evening, but when he is ever asked the question, how much should one invest in precious metals? What does he say, Brian?
Well, the perfect answer is whatever you cannot afford to lose. And as you get older, you start to recognise that a little bit more than when you're younger.
Matthew, thank you so much for your input. Appreciate that. I also thank our viewers and subscribers for watching this channel and supporting us in the manner that they do. And so until next time, stay well, stay focused, and goodbye for now.
And goodbye for now.